Okay, good morning, traders. I think it's already 8 o'clock on the dot. And so we can, say good morning to ourselves and prepare to take today's market review. And of course, if we see chances to place a trade, we place a trade. If there's no chance to place a trade, we move on. But of course, we'll do justice to, 100% objective analysis of charts, okay, it's ranging from currencies to commodities to indices to whatever you may want to trade. Okay, so most of you that are not traders, prefer to trade currencies because of the low entry barrier, right? So if you want to trade currency, you don't need more than maybe $100 or thereabouts, and of course you can trade. So before now, when Naira was still very, very good, 1 Naira was about maybe 400, sorry, $1 was about maybe 400 and something Naira, 380 Naira, you know, pre 2020 COVID. Okay, so, and of course, at that moment, if you have $1,000, which is about 380,000, you could actually do more in the market. But now, $1 is about maybe plus or minus 1,500, 1,004 something at the moment, which means that if you want to trade big in currency, you need to have as much, say 1.5 million, thereabout, up from, 380,000 to 1.4, 1.5 million. So that's big. That's true. Those who want to trade big. But even if you have $100 then, which will be 38,000, okay, you could still trade. That's why, as at then, even if you have 50K, you can trade. For now, $100 is about maybe 150,000, which means if you have about 150K now, you can actually trade. So what happens to those people that have 100,000? Okay, what happens to those people that have 50,000? Well, I thought not bad. That's what Nigerians say. Even if you have 100,000, you can still trade. Just that you have to be careful. If you have 50,000, I will not advise you to even place a trade. I would say you should actually go ahead and add more to your money and trade. It's better that way, so that you can have some leverage to play with. Okay, trading is all about, having opportunity to place a trade and watch the price, move in your direction, which may not happen in a hurry. And you're being put off that food, which may not happen in a hurry. So if you want to trade, you have to be objective enough, to look at the realities of trade. Now, I'm still giving you preambles as to, what you can do differently to trade, and of course, how you can prepare yourself to trade better as a trader. Because based on what I've seen, based on post reaction, based on people's, feedback, I understand that if you want to trade and trade big, you need much money. Okay. Those people that trade small, those people that have small money and trade, well, they still make money, but it's just that it's a lot of struggle. If you really want to break out in trading, you need as much as minimum $100, which would be about 150,000. So it's a wake-up call for all of us this morning. If you have less than that, please shock up your account to as much so that you can trade better. Minimum 150K. And of course, you can scale it big. If you have like all these 3 million, you can actually do better. But of course, personally, I trade from 500,000 and above. So let me quickly, allow for a multiple presentation whereby I will start directly from Forex Factory. And of course, it's a new way of actually analyzing markets. All right. Giving you this because I feel that, it's one of those things. Information is power. When you have the right information, you can do better. Let me see how many people are in the house. I don't think I've mentioned anybody, but of course I see, I don't know what to call you, Brahma or whatever. I did doing essay, okay, and I don't know who have I mentioned. I have a lot of people in the house. I really Bolaniwa, Chinedu, Danlad. There's a name here, D. What does D stand for? I don't know. Okay, but I see Ngeti, a D, a PMC, Essay, Femi, Henry, Karibo. Okay, Simon, Moses, Alakpere. See Alakpere? Alarakpe. Sorry, Gary. Your name stand like all those, but Alarapo is good. God's will. Is it Okpabio? No, I doubt it. Okay, Ojelabi, Oko, or or Opalaima, right? I think Chinenye would be better for me to call. Okay, Oyinye, Oyebowale, Rutu, Queen, Est, Nest, Chinese, Queen Est, okay. Ochechukwu Williams, Yemzi, of course, Yusuf Rashida. So I have a lot of names. Don't worry if I skip your name, it's fine. Eventually I will still call your name. So, but I actually like to, actually see people's name and give them good morning. And of course, somebody just dropped a message for me. Only a D greeted me back. So of all these people that have mentioned their name now, only one people can say, only one person can say good morning to me. Okay. So of course, Eddie, you asked a question. Can you convert your Naira account to dollar? Well, you can open a dollar account. You cannot convert your Naira to dollar. Excuse me. You can open a Naira account. When you open a Naira account, you automatically, how do I say it now? When you open a dollar account, okay, you can withdraw your Naira, right? Go to where you want to sell it, and buy dollar, and then come back and deposit dollar. Because you cannot convert from Naira to dollar, right? You deposited in Naira, you have to withdraw in Naira. Deposited in dollar, you have to withdraw in dollar. You cannot do dollar to Naira conversion or Naira to dollar conversion. It's not allowed, all right? So you like to trade in dollars, you can deposit dollar directly, right, into a dollar account. But of course, it is allowed for you to open both Naira and dollar account. And guess what? Rally Trade is the only broker in Nigeria that does that. Okay, Rally Trade is the only broker in Nigeria that allows you to deposit in dollar and withdraw in dollar, right? Makes sense, right? So if you prefer to trade in dollars, Eddie, go ahead and trade in dollars. But that's the way to go about it. Now, Jonathan said good morning. So only Jonathan said good morning also. Okay, so no problem. But of course, everybody, good morning to you all, right? Chinedu, thank you. Yeah. All right, so let's go ahead and discuss Forex Factory. So you can see that I have a lot of informations on the screen, okay, ranging from MI inflation gauge to this week, Monday. Today is Monday 3rd, to monetary base year and year on Japanese yen, which will be around 11:50 p.m. Now, 11:50 p.m. Nigeria time will be when hold on, let me check something. Let me GMT +1. Let me adjust this so that we can be sure this is Nigeria time, West Central African still setting. Okay, so let's now look at it carefully. Now, based on what we have here, the Japanese event already happened. So this is adjusted to Nigeria time now. And the time here says around, let me check the time of this Forex Factory, 8:08, which is good. So the first event that happened today was on Australian dollar, which happened around 1 o'clock in the morning, this morning. And the last event that will happen today will be around 10:45 p.m. for New Zealand. Now, let's look at this Japanese event, final manufacturing PMI. And but of course, it's happened already. So the result is already printed on the screen, as you can see right here. So, but all this information is for your own, good. You might want to take into account this information when you want to trade Japanese yen. Now, but for what we have here on yes. Good. So whatever information is happening out there will not filter into our discussion. So based on what I can see here, I have a lot of yellow folders. Yellow folders are these ones that have this yellow information, like you see here, all these manufacturing PMI, all these commodity prices year on year for Australian dollar. They are yellow events. Now, yellow events are not that bold. Let me show you what I mean. So you see all these yellow events, they are of minimal or negligible impact in the market. But of course, the brown envelope may be a little bit okay, but the one that can actually majorly impact the market is the red folders. So I might want to kind of like disable this yellow event and only do with the brown and the red, and then apply filter. Of course, this will cut all those informations off and only give me important information that can actually affect the market. So the one that can affect the market today are this European event, which will be coming for Euro as a currency, which is called PCI, called CPI flash estimate year on year, and of course CPI flash estimate. It's just a flash estimate. It may not actually impact on euro that much, right? But the one that could actually affect dollar today is the ISM manufacturing PMI, which will be coming up around 4 o'clock in the evening today. So if you are trading Euro USD or USD JPY or USD CAD or AUD USD, any currency pair that you are trading that has USD in it, you might want to take into account this event around 4 p.m. today. Of course, that would mean that you may want to, suspend your trade or trade at that particular moment if you know how to trade events. Otherwise, you stay off the market at that moment. All right. So if you want to trade this, all you need to do is to wait until this actual report is, recorded. It will be printed here. Because if the actual is greater than forecast, US dollar will appreciate. If the actual report is less than forecast, US dollar will depreciate. But based on what we have this morning, okay, based on what we have early this morning, I think we have a gap up on Euro USD. I'm going to share my screen, regarding Euro USD shortly. So I'm going to just go to, before I do that, let me come here and share my MT4 screen right now. Yeah. So I'm going to go to Euro USD, bring on board so that we can see what happened to Euro USD this morning. I saw a gap up because I woke up around 2 o'clock to just check chat. It's been part of me now. Okay, sometimes if I don't wake up in the night, I don't check. But sometimes when I wake up in the night, I look at the chart, right? Just briefly, and then I go back to sleep. Okay, it's what I do. Even if I will not trade, I just like to look at the chart. Okay, it gives me an impression of the fact that I know what I'm doing. The scripture even says, whatever you learn to do, you do it well. So it's my business, and of course, I'm 100%, into trading. So I like to look at the chart once in a while, right? Anytime, any day. So there's a gap up, and of course, this suggests that this price could actually pump up this week, all right? Euro USD could actually pump up because the direction is actually shifting to the upside. So this downpour that happened on Friday, Thursday, Friday, I think let me just do Control Y. Yeah, Friday majorly. And of course, I think Thursday, Friday, the downpour on Thursday, Friday was actually as a result of, some events that we may find out as we move on. Let me just do Control G, Control Y. All right, so permit me to just do Control Y again. This event is Friday. This event is Thursday. So the downpour that we have on Euro USD on Thursday, Friday might just be technical. It could be because except we go check the Forex Factory now to check what happened, then we might not know. But I must tell you that this Euro USD is beginning to shift to the upside. All right. Even though I'm a fan of BS, I'm with the BS when it comes to Euro USD. I like selling Euro USD because dollar seems to have upper hand, in recent years, right? Maybe 2, 3, 4 years ago. Let's do a W1 to look at what I mean. So if you look at, let's even do I think this weekly chart. So let me check something. Since I'm on the weekly chart, let me check how many bars are in this line. 1, 2, 3, 4. We have about 52 bars. So that's about 52 weeks make a year. So this is a year. Let me show you what I mean. So this is a year. This is 2024. This period is 2024. All right. Let me do something here and move it. So this is 2023. So in 2023, we saw a lot of bear move, like constant bearish movement to the downside of Euro USD. Let me show you what I mean by that. Let me squeeze this to this level and squeeze this to this level. So you see this move. It's kind of like a once in a lifetime move. A very strong bear pressure that persisted over several weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Like almost 12 weeks. That's about 3 months. Persistent drop on Euro USD without any form of bullish resistance or whatever. All right. So that tells you that that tells you that dollar can be very, very strong. But even though we have something similar around here for euro in 2022, we have whereby we have a lot of bullish move, but you cannot count it and say, okay, it's equal to that of theirs. So if you look at this one, we have about 1, 2, 3, 4, 5, 6, 7, 8, 9. That's about 9 bulls. Even though we have some bearish, pressure in between, or like when we have this bearish, strong bearish move there. And if you look at this area also, you see this in 2024, you also see this strong bearish move on Euro USD. But this 2025, we are beginning to see kind of like a stability on Euro, right? And of course, let's say that we might begin to see Euro USD pushing forward. But then if we see this bear pressure, I don't see it as something that can continue like that. I mean, what I mean by I don't see is this kind of move whereby you have this strong bearish move for Euro USD may not actually happen this year, all right? Because if it happens, it will mean that this Euro USD will drop to this much, okay? It will actually go below parity, which may not actually happen, right? What I was hoping to see on Euro USD, so Euro USD to actually return to parity, which was close, all right? Close around here. I want it to be around 1.00, around here. Let's go a little bit down. Around here. Okay, around this zone, it would have been okay for Euro USD to pull. But even if Euro USD is going to drop, this would be the likely area to drop to this 2025 before it will to appreciate. So you could watch out for those kind of moves. Now, let's clear this screen and go to D1 so that I can tell you what I feel on Euro USD. Now, if you look at the daily chart, you see this move, okay, a very strong one. And then I can now go ahead and add some indicators to the chart to tell whether the price is about to turn and go up. And actually, we can actually look at that. There's an indicator I like to use, right? And that's this one. I'm going to just insert a moving average, a very simple strategy, period 50, but of course, I'm going to make this one simple period. And then I'll do okay. This is a simple period. So this is a simple method of calculating moving average. And of course, the period is 50. Now, the next one that we insert is also going to be a moving average, but the period will be 21 and the method will be exponential. I'm going to change the method of calculation. Okay, there's a reason for this. Now, the simple method reacts slowly to the price. The exponential method reacts very fast to the price. Okay, so the exponential method moves very fast and the simple method moves very slow. So by the time you look at the average weight of the two, you should have a fair assumption, a fair, critique of what Euro USD should do. So I'm going to change this color to red, all right? Of course, I will do okay. Now, I'm going to just do this, zoom in so that I can look at the candles properly. So based on what I have here, this Euro USD move from, I'm going to just use an arrow to show you this. Okay, this Euro USD move from this low, right? Let's move it to this one, then to this one, and 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 then it got to this level, couldn't go up again. So I'm going to mark this level as after this strong move, okay, this strong bullish move on this one. 1, 2, 3, 4, 5, 6 moves. The Euro USD met a resistance after 6 consecutive days of movement. Met a resistance and couldn't go up because if there was no resistance, the price should actually print more candle that will be going up. Makes sense, right? So let's wait here and check something. I'm going to just click on this horizontal bar and place here, right? That's where the Euro USD got to, and of course it did not go up more. All right, so I'm going to make it very tiny. So let's look at something now. Now, after this move, the Euro USD printed this small candle for a rest, and then it printed this bearish candle, and then it printed this bearish candle again, and then it finally printed this bearish candle. Now, after this bearish candle was printed, the bearish candle actually descended so much that it met this red line, which is the 21 period moving average. Now, this move that touches this moving average only shows something, that Euro USD met a support on that 21 period moving average, which means that when the bearish pressure persisted on this candle, it pushes so much that it met this candle. Eventually, there was a reaction, and of course, the price actually bounced off and closed around here. And then the next candle that printed now moved, and it was a bullish candle, right? And closed above our previous resistance. Remember this line that we draw here, that drew here? It was a resistance line, and of course, it should actually generate a price. And now I'm going to just give you something like this. I'm going to just click on horizontal line and move it to align with this line, right? It's an assumption, it's not as if it's constant price, that it's constant K, okay, but it's fair price. And we can call that resistance 1.04924 assumption. So that's an assumed resistance price that the Euro USD met. Now, eventually, this candle, I remember this candle, bullish candle, moved and actually closed above the resistance of 1.04924. What this means is that Euro USD broke a resistance around it. Personally, like if I was trading on D1, I would have placed a buy trade around it. This is where, if I once this candle close, I'll just open a buy trade. That's what it means. And my stop loss will be, because I'm trading big, I could actually use below this black line. Anywhere below this black line will be a very good stop loss. Maybe below this candle, right? Or maybe below this candle, all right? Or maybe below this candle, all right? Or finally below this candle. Those are assumed levels where you can put your stop loss, right? But let us say I put my stop loss below this level because I'm buying here. Now, that's a big risk, but the reward could actually far outweigh it. Now, eventually, Euro USD drop on the next day, rose a little bit on the next day. And of course, eventually, this one would have given me profit, right? It actually rose beyond the entry level. Let's find out how many pips it rose. Let's find out. So if I click on cross here and come around here, I would have seen that if I have placed a buy around here at the open of this bearish candle, I would have been in profit to the extent of about 28 pips, 29 pips in profit. Now, even if I will not close it in profit at that level, I could have broken even. Right after 29 pips move, I could have possibly break even and say, okay, you know what? I'm in profit of about 20, 30 pips. Let me break even. Now, eventually, the break even would have closed me out, all right? Even that same day, it would have closed me out, right? At break even. Of course, I may still enter again because eventually the next day, right after this day, the next day the candle was still bullish, and of course I may still be in a play. And by now, I will still be in trade, but I'll be on the negative, right? Because by now the price has gone below the entry level. But the worst that will happen to this trade is that the price will eventually hit stop loss. Let me show you where the stop loss will be. Let me to just double click on this and drag down, right? Just gonna drag it down. Oh, sorry. I'm just gonna copy it and drag down to this level. So even at that, I would have still been in play because my stop loss will not be hit, even though the stop loss will be very big, right? Let's find out how much the stop loss could be. The stop loss could be as much as about 180 pips, which is large, right? On the maybe mini lot, that's a lot of money. For the mini lot, that would be around $180, right? For the mini lot. Okay, so that's the way it will be. Okay, but of course, if I'm trading and I'm using a stop loss of $180 or $200, that means I'm trading big. Maybe I'm trading a $4,000, $5,000 account, all right? Or even $2,000 account. 10% of $2,000 is $200. So that means I'm risking only 10% of my account, right? And of course, I'll still be in play. Okay, but that's the way I see Euro USD. So I see Euro USD as something that can still actually push up. Now, this gap up today could be as a result of the interview granted by Trump to Zelensky, they call him, the Ukrainian president, right? So a lot of worldview, people's reaction as to that interview says that actually Trump was more of a bully, okay? And Trump and his team really, okay, were more of a bully than actually looking for a solution. Okay, they are looking for something that they're just trying to cow the guy to agree to their, demands, which is not, too good with Zelensky. And eventually the guy actually refused to sign anything with USD, which means that USD will not be getting some raw materials, mineral materials to compensate them for the effort they actually put in place to help Ukraine fight the war with Russia. But eventually, Euro as a currency took over and there was a gap up. So today, I want to believe that Euro USD should continue to appreciate because whether you like it or not, as long as this red line, moving average 21, is above 50 period 50, moving average, there's potential for the price to rise, right? That's a shift in momentum from bear to bull, right? You can see this period where you have the red below the black, right? That's when you have a bearish period, right? Now the attention is need to shift to a bullish part because now the red is currently above the black, which means that the price could actually go to the upside. So look out for a buy of Euro USD. And if you want to really do it fast, let me clear this screen. What you can do is to go to 1 hour chart and be looking for entry. And to do that, you actually insert the same moving average to Euro USD. That's the one I call this one. Okay. Of course, you wait for the price to go, that's for this red line to go above the black. Of course, you'll be in play. As long as the red is above the black, you can trade the buy and you make money for 1 hour. And if you want to go low, like you want to go lowest, the lowest I would recommend is 15 minutes. Okay, and of course, even on the 15 minutes now, we already have kind of like a juggernaut, like a signal, right? The only thing you are looking for is a breakout. So to do that, on this 15 minutes, you wait here for a buy, around here, you wait for a buy. So when the price crosses this level, you place a buy. When the candle closes above that level, you place a buy. I'm repeating, when the candle closes above that level of 15 minutes, you can place a buy, right? So if you are a fan of, candlestick, all you need to do is to look out for this candle. This candle actually closed, it closed doji on Euro USD. So there's a doji candle, look out for it on your 15 minutes time frame. Any close above that doji candle, you can place a buy. That's the way, or that's the 100% objective analysis on Euro USD. People have been patient with me. They have carefully listened to this analysis this morning. And of course, I'm sure that they have learned a lot, all right? So, somebody say good morning. So, what do you think, people? This analysis, have you learned one or two things around or about or on it? Let me know in the comment section. Just send me a private message. I'll get it. Send me a private message. I should get it. What you have learned from this information. Now, this same strategy that I just showed you on Euro USD, you can use to do anything. You can use to trade anything, absolutely anything on the chart. You can use to trade gold. You can use to trade cocoa. You can use to trade anything. All right. Let me know in the comment section if you have learned something. And of course, we can now move on to something different. So if you want me to look at something different, also, you can suggest to, you can actually tell me what to look at. I will look at it, right? Tell me what to look at, I'll look at it. But before you tell me what to look at, let me also look at, it's been longer I look at the AUD USD, but I feel that this one can actually be another money spinner for you. And what I have on AUD USD now is kind of like a torrent, downpour. But of course, this one will actually lift up this morning. Will actually lift up. So you should look out to buy AUD USD also when the trend shifts. Now the trend is strong to the downside, but of course, nothing lasts forever. Eventually, it will shift. And when it shifts, you can actually still trade a buy. Now, I'm going to just place for this one, I'm going to place a buy personally, but you can wait until this red line cross above the black on your own before you place a buy. But I'm going to enter early, okay, and place a buy, right, on my own chart. But I would advise you wait for the red to close above and then you can place a buy. But right now, I'm having issues with my account. I don't know why they didn't not placing the trade. Let me off quote, maybe because the price is moving very fast. All right. But if it is not entry, I'll just suspend it and do something different. So let's look at something different. Somebody dropped something. Let me check. Somebody says greeting. Oh yeah. Says so it mustn't close the gap before it pushes up. It doesn't have to. It does not have to. Price does not have to close a gap for a moves up. Sometimes it doesn't. Sometimes it does. Right. I'm saying that you wait until you have that signal. Okay, when the price closes above that doji, I think she's referring to the Euro USD. Okay, what she's saying is that must the price not close this gap? Okay, there's a gap there, obviously. There's a gap between there and there. So Onye is thinking that the price will close this gap before it begins to go up. But I'm saying that sometimes price don't close the gap before it goes up. In fact, in 2017, after Macron election, Euro USD gapped up, even on D1, right? Something like it. And it didn't close it until about 4 years, 5 years. Just left the gap open. And they only recently closed it 2024. It closed that gap 2024. We could actually check it if you feel that you want to see it. All you need to do is to go to a candlestick view like this, and then look at D1, and then zoom out or zoom in, and then we can look at it. So in 2017, okay, I think it closed in 2022. Let me check. Let's go back a little bit. 2017, right? Right. Okay, so if you look at here, let's just right? So, and then we zoom in, and then we can go to the front and check 2017. So there was a gap here, right? That was not closed until years later, right? So from here, in fact, the gap started from here and then ended at the open of this candle. And then the gap was not closed until years later. Let's go to the front a little bit. Let's move it here and then extend it to the future. Extend it. See, the thing don't go now. Let's do it like this. Okay, extend it to the future. So it only closed around 2020. That's about more than 3-4 years, right? 2020 was when the gap was closed. So yes, sometimes when the gap happens like that, it can actually escape. Price, we call it gap and go. That's what we call gap and go in trading. So sometimes when the gap happens like that, it doesn't have to necessarily close. Okay, I think that's clear enough. Let's look at something different. So is it still a buy sign if candle is forming above or below the red line? Well, as long as the red line, I think you are still referring to the same Euro USD. I think his name is Yusuf Abdul Kadir. Yusuf Abdul Kadir. So what Yusuf is asking is, if we have, let's say we use breakout, and then we use 15 minutes or 1 hour or whatever. Okay, let's use that D1. So what Yusuf is asking is, if this price is still below or above this red, currently it is below the red, but above the black. He's asking if we can still buy as long as the price is playing between this red and the black. The answer is yes. You can still buy as long as, because this is still a bullish sign, okay? As long as this price is still playing in this region, right? It's still a bullish sign. You will no longer buy when the price closes below the black line. That's when you don't buy again. And for example, now you have one close below now. We count this one as one candle close, all right? The strategy itself, you need to, this strategy is a little bit complex. It's not really easy to explain. You will just take time to just look at what you have. So I'm going to just come here and, type 1 here, just one. So we have one candle close, we call it one close below the black. So as long as we have only one candle close below the black, we don't have to worry. The trend is still intact, top trend. But when you are not beginning to have 2 candle close, okay, 3 candle close, then the trend has changed finally. So let us say we have this one as 3, okay, consecutively 3. Then we have this one as 2, okay. All right, 2. Then we don't have trend anymore. That's when the trend shifts. That's when we say the trend has shifted. So what I mean is, when you have a candle close like that, and then you have another candle close like that, then you have another candle close like that. If you have 3 candles close below the black, consecutively closing below the black, then you can no longer buy again. That's when you have 3 candles close below the black. But if you don't have 3 candles close below the black, you can still, the trend is still intact. It means the price can still actually go to the upside in your favor. I think I've answered up to Kadiri. Okay. I like that people are asking questions around the shows that they are following, right? So, and of course, Daniel Getty says, I don't fully understand your moving average analysis on Euro USD. Well, like I said, it's a big class. In fact, if we begin to talk about the strategy, we might spend the whole day analyzing it. But of course, by the time we spend that quality time, you will understand it, right? So it's an advanced class. One of these days, we'll discuss it. I think this March, we'll discuss the strategy, and that's online so that everybody can plug in and listen to it. Now, Zelensky says that CC is saying, Zelensky says Ukraine ready to sign mineral deal with United States. Well, if he says so, congratulations to him, if they will sign. Because what I had Trump said last, I think about yesterday in his tweet was that US is not ready to sign anything. But it doesn't matter, who cares? It doesn't concern us in Nigeria. Let us enjoy our trade and make money wherever the price is going. So Joe Jukrom is asking, is this strategy the same with Fibonacci? No, this is a very completely different ballgame. But let me go to people that asked me to look at things. Somebody, Kenny, said I should look at GBP, JPY, and gold. And of course, another person said I should look at Euro USD. That's Abalendenoke. What is this name? Abalendenoke, not K. Let me not bother myself. This name. Let me just call you Victor. But you want me to look at GBP USD. So I'm going to open 3 instruments now. GBP JPY, first of all. Let's start with that one. Then I'll follow it up with gold according to the person's request. And then I will also finally open GBP USD. Okay. If you still want me to look at something, you better say it now so that I can open all those charts already and then we can look at them. So let's start with GBP JPY. Based on what we can see here, without even actually looking at the candles properly, we can see that the price is ranging, right? There's a range right now, which means that this is not a good time for you to place a trade on JPY. There's no trend right now, but we could use this same strategy we'll be discussing this morning to look at things in perspective. Based on what we have here, the price could actually go up. There's a chance, very high chance for the price to appreciate, right? So you might want to look out to buy GBP JPY. Okay, let me see if I can just try and place my own trade. Okay, based on the information we shared this morning, this price will appreciate. Okay, so I'm already on a trade, right? So as long as this red line is above this black line, we are safe as a buyer. And our stop loss could be below the low of this zone, right? So let's place our stop. If you are going to use stop loss at all, it should be below this candle. So anywhere around this region is fine as your stop loss. So you could use this area, this painted zone is fine for a stop loss. So put your stop loss there, anywhere around it. Of course, will be good to go. And of course, the take profit could be anything from 10, 20, 30 pips going forward, right? So, and of course, remember that the stop loss should be inside of this zone. So just drop it anywhere around that zone. All right, so that's the way I see GBP JPY. Very fast, I'm going to go to gold so that I can look at things with people. Based on what we are seeing, I think I was online on Sunday, and then somebody was analyzing this gold. And based on popular opinion, analyst opinion, really, gold price is supposed to be $3,000, right? But of course, we saw gold rose to around 2,955, thereabouts, and formed a double top around here. So somebody was now asking, is gold turning back? That was the question he asked in that forum. Because of course, like I said, all of you know that I am a member of various trading forums online. You can be a member of anyone, right? So all you need to do is just go to maybe Instagram, maybe Telegram, maybe Twitter. You see a lot of people, inviting you to get a join forum. Because with join forum, they can discuss. You guys will be discussing trades. So you need to do is to just participate, and of course people can hear your opinion. But of course, on this discussion, I didn't participate because I participated before. But somebody threw a question out and asked, "Is gold turning back?" So the question remains: is gold really turning back? It is possible that gold is turning back. Based on what we see on this 1-hour chart, I cannot categorically say that gold is turning back. But we are seeing patterns right now. We are seeing the price break a neck like a support. Okay, now this level was a resistance at this point, right? At this point, it was a resistance. Suddenly, the resistance was broken here, and the price will test it around here, and the price will test it again around here and held, which means that the price still wants to go up. Eventually, there was another retest here, and of course, the price was still bouncing forward. Eventually, another retest around this zone, and eventually the level was broken. So now we need for the price, for us to say that gold is going down, we need a proper retest of this level. So if we zoom in now, maybe on candle, let me take this one to candlestick. Where's candlestick now? This one, right? So I can zoom in, of course, press Ctrl G to remove grid. Then we need a retest of this level. And of course, we got something close, maybe around here. It actually seems to be a retest, but we cannot categorically say that that level is 100% retest. Okay, so we saw this candle that tried to, hit this level, but it didn't quite get to it. So let's wait for this level to be tested. So if we have a retest of this level, right, going forward, and eventually the price break that level, previous level, and go down, then we might say that gold is finally, retracing back to, the lower side, right? What I mean is, eventually, if this level is properly retested, gold will eventually break this level, right? And when you break this level, then you can begin to massively, click on sell, so that you make a lot of money. That means you follow the PS. Any other questions on gold? Any other question on gold? So for now, I'm going to stay off gold. I need a proper retest of this level, a clear technical analysis for this one. If I see a proper retest of this level, then I'll wait for this breakout. And of course, I can join the sellers. Otherwise, if the price push up and close above this level, then the price can actually go back to this level, and possibly break it and move forward, right? What I mean is, let me repeat, if the price break this level, again, if it pushes up and break this level to the upside, right, then the price could actually move up like so, 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 and possibly break this level and break above. And that will be the end of gold. It most likely hit, break above 3,000. But if this level persists after this close, or whatever it is doing now, if the price continues to drop, let me show you, continue to drop and close below this level, right? Once it break this level, close below it and begin to trade lower, then continue to place sell on the chart. You might want to take a picture of this screen right now. I will pause a little bit so that you can take a screenshot of your screen right now and then have an opinion as to what this price will do. Because the price is still currently where it is, but if it does what I just painted for you on the screen, then you can now begin to look out for itself, right? That would actually be an advantage for you to actually make some money on gold. I think this analysis is quite objective enough, right? So let's look at the comment section again and have people talk to me. So let's see. Somebody says I should analyze Euro AUD, and that says USDJPY. Somebody is asking me what's the number of the black moving average. Maybe you came late, but the answer is 50. That's to CC. Your name is CC. I don't know what CC means. Oko, you want me to look at GBP card, D40, and US30. Wow. Okay. I'll try. Of course, Angel is asking me time frame, please, for gold. But of course, Angel, I've been on 1 hour, right? 1 hour is my favorite time frame. It gives me opportunity to trade without actually going too low or too high. Okay, so I am 1 hour on gold, right? So let's open up and look at GBP USD before we look at GBP card and the rest of them. So for this GBP USD, for the person that asked me to look at it, what we have here is well, the price is not really too bad, but we can look at some things. We can just insert our today's strategy. You guys can see that I'm switching strategy as I wish. So based on what we have here, this price can actually go up. I'll tell you why. Let me first of all zoom in and show you something. Okay, so I'll just wait for a confirmation and then I'll place a buy. If I begin to see candles close above this red, right? Close above it and close above it, and eventually maybe close above this black line, then I can tell you that this price will eventually go. Why? Because you see, there's a candle here, this candle, this particular one that I put arrow on, it's actually a spinning candle. And the spinning candle formed after a bullish candle closed above the moving average red. So if I was using only one moving average, this would have signaled a buy. Now, if this black line is not there, let me delete it. Let us say the black line is not there. What this signal means is that the price has potential to go up. All right. So I could actually begin to place a buy because already I already have a price traded above the high of the candle, which is on this one. So this already signifies that the price wants to go up. Now, that the price is not currently pushing forward very fast would be because there's a black line, like a resistance ahead. Okay, so let me insert the moving average again, which will be 50 period, 50. And of course, remember the strategy is simple and the color is black, right? So I'm going to just do okay. So right now there's a resistance ahead, even though the price has already broken one resistance and it's not acting as support. So, but of course, we are beginning to see prices of candles closing below it. So let's hope that the price will eventually move following these arrows you see. Let me delete these two. We don't need them anymore. I just need to show you some information on GBP. Okay. So let's wait for the candle to close according to what we have here on these arrows. If it does that, then by all means you can place a buy. Otherwise, you stay off GBP for now and wait for more information. But the signal is beginning to play bullish, even though it is currently printing red candle. Now let's go on to GBP card. Somebody suggested that. I'm going to check to confirm. Yeah, GBP card D40 and US30. Right. So let's go to those three guys. I'm going to go here and look out for GBP card. GBP card. GBP card. What? I don't have GBP card here. What happened? Let's find out. GBP card. I don't have GBP card. Yeah, I think I've seen it. Down. GBP card. Then I'm going to go to D40 under indices. And finally, I'm going to go to US30 under that same indices. Okay, so it's not here. So we can check it on FX1, US30. So after these three analyses, I might just want to stop. But of course, let's start with GBP card. So what we have here is that the GBP rose against card. That means the card was weak at a point in time. But the GBP is still holding strong to its potential on this. So I'm going to just zoom out and check. Based on what we have here, there is a complete move now based on this information. The card might react. We are not sure. But let's wait something. So we're going to just draw from this level to this high. I'm going to draw it completely. I want to check something. I want to see if the previous move is equal to the current move. I'm going to now bring it to this level. So what I did here, everybody look up. What I did here is that from this low point to this high point reached, right? I want to check whether it is equal to the next move up here. Oh, sorry, I'm going to just come here and copy it. I want to see if it is equal to this move. It is not. Okay, which means that this price will still go up, right? That's what it means. This price will still go up because it could actually complete this move to the upside. Okay, so when you see these two moves complete, you know that that movement is actually complete. But let's look at it on fib. So if I plot a fib on this one to check something, all right, the level of that 0 is already broken. Okay, so which means that the price could actually let me flip it upside down. I'm going to just double click on this fib and delete. So I'm going to draw from top to bottom. Okay, I want to see the move like so. So we have level 0 to 100, and of course, the price could actually get to 161. If it continues to pass it and break above this 100, we could see the price rise to even 161. So I'm going to zoom this and drag up and continue to look at the candle. So if the candle continues to play around this 100 and continue to close around it and break this region, if you break this region really, the price of this GBP card would actually approach that level 161 of fib. Okay, that would be a resting point for it. For now, I think I want to just stop trading on GBP card and wait. But let me also, ignore all these Fibonacci shenanigans and go to a particular indicator I love to trade with now. And I'm going to just insert it in your presence. Custom, go to here. Oh, sorry. I think I've done something not good. I've done something not good. I'm going to just go to, I'm going to just go to insert and go to custom, scroll down, right? Scroll down until I see support, resistance, zone, and insert. So what we have here is that the price reached a resistance now, and of course it's trading towards the support. Okay, so I now look at the candles in there closely. Well, plus or minus, this price might just play around this zone, all right? Based on what I'm seeing now, the price will continue to play around this zone, and we are not 100% sure if it will drop. Okay, because the potential is still there for the price to go up. So if you ask me, I would say you should just stay off GBP card. Before I go to D40, let me look at the comment section. Somebody says for that GBP card there's a strong illusion of weekly, daily, and 4-hour side flow. Well, we just discussed that. What do you think about dollar index? I've not looked at it, my baby. Your name is my baby. That's why I call my baby. Okay, so my baby, I've not looked at dollar index. Okay, so I don't know what my baby means. Is it your name? Wow. Okay, how about US 100? Kalu. If we have time, we can look at US 100. Why do you make 50 simple and 21 exponential? Can we make both exponential or simple? This just wrong. Your question is too much. Just follow my lead. You ask too many questions. Just use 50 as simple and 21 as exponential. That's the way the strategy is. There's no question asked again. Finally, I think I explained it at the beginning, so maybe you were not here. Now I'm going to go to D40 very fast and finish up with US30. And we have about 8 minutes to do that. Now D40 gapped up this morning, and that's after we saw the price of this index actually drop, I think on Friday, majorly on Friday, even though it begins to drop on Thursday, but the major drop was on Friday. Seen this, right? Yeah, Friday. But then that same Friday, it rose again a little bit and then dropped again. So, but this morning, it actually rose with a bang, with a gap up. Okay. Like so. So what I feel on this particular one is that the price still have potential to go up, but who can tell? Maybe the price will not begin to drop, because indices price over time has continued to rise and rise and rise, but nothing lasts forever. I still expect a drop in some of these instruments as time goes up. All right. So I might want to, if I were you, if I was the one trading that, I don't have a trade on it right now, I might want to stay off until I see a clear direction whether it's going to go up or go down. Because right now the price is still in between the gap up this morning. Okay, after that strong gap up, there's a gap down. Of course, the price has maintained stability. And then finally, I'm going to go to US30, which will most likely be the same analysis as D30 or D40. I think I already opened it, so I'm going to just check here with it here. So I think it's a little bit different, but let's open up the candles to check. Okay, the US30 rose massively in the last 2 trading hours on Friday and closed with a bang, right? Two strong candles, 2 very strong candles. I have to say it in English. 2 very strong candles, this candle and this one. 2 very strong candles, rose and closed at that level. And of course, even this morning, there was a gap up. So if you ask me, I think this one gave a better potential to buy than D40. Okay, so for this one, if you like, you might want to play with buy, right, on this one. That means the price could actually appreciate. That's what I mean by that. So you might want to be looking to buy on this one. But like I always do, I'm going to just go to here and check with this. Well, this if you are entering now, you are entering very fast. Okay. if you place a buy right now on this one, you are buying with a hurry. What I mean by that is because the price would still go back. There's a potential for it to come back and hit this moving average, or even drop to this black one. So there's room for this price to actually retrace a little bit. But if it escapes with this information that you have here, then it will mean that this moving average will follow through and meet it. Let me tell you what I mean by that. Let me explain. You see, price and moving averages are one and the same, right? So anytime price move far away from moving average, like in this instance, I'm going to let me just use an arrow to show that. So the price is currently here, right? Okay, but after this candle move and close here, breaking these two moving averages, and then another one move far away from the moving average and close here. There was a gap up today. Now, this gap up has a distance from the moving average, especially the red one. Now, the price dropped a little bit, and then rose a little bit, and dropped a little bit. And now you can see that the price is actually ranging in this area. What the price is doing now, normally the price should have dropped very fast. If it wanted to really continue to go up, it should have dropped very fast and meet this moving average and then rise again. But instead of the price to drop to the moving average, it actually dropped to this level and begin to stagnate. What the price is doing now is that the price is waiting. There was too much elastic around here. The price is actually waiting for this moving average to come close because it will eventually meet it. What I mean is, if I zoom in a little bit and show you something, at a point, the price was far from the moving average around here, right? From this moving average. So the price rose sharply and met the moving average, broke it, come back to this one, and then drop again. Now there's a price back in there. And of course, there's a distance again created around here. So the price is currently at some distance away from the moving average. One or two things will happen. Either the price will return to this moving average before it will continue to go up. Let me start from here and draw. Either this price will return to this moving average and then begin to go up, or the price will begin to stagnate until this moving average come close. And then there will be kind of like an agreement or a meeting. Before you know it, the price will begin to go up. So if you are buying now, you are buying in a hurry. And if you want to wait for this moving average to come close. And of course, you can place a buy on US30. I think that analysis is 100% clear to everybody. And I want to appreciate everybody that was with me today on this analysis. While I now, enable only one person to open the channel and say hello to me and ask me one question only, and then we'll close the class. Who is going first? You just raise up your hand, and then I open the channel, and then you ask your question based on this analysis. And of course, we close. But if there's nobody that raises up their hand or that raises up his hand, I will close the class. So Oguchi raised up his hand, so I will allow him to unmute his mic and talk to me. What's up, Oguchi?
Good morning, sir.
Yeah, Oguchi, good morning. Ask your question.
Nice to have you again. You are
Thank you.
Wonderful.
Thank you.
Continue, I'll never miss your class again. My priest told me yesterday, never fail to listen to your teacher. Always learn from your boss. Don't think you have it off. So it gave me an insight to start with you today again. I'll forever with you. And last week you asked me to send you a private chat. You didn't respond to me because when I asked you that, is there any market manipulator in this forest? Because being with you since 2021 not to date, I have formed my account like 8 times. I think I make only 40-something thousand withdrawal. That is something if you calculate it's like 1.something million. But it doesn't matter. I know the more you pay, the more one learn from it.
So what message did you send last week?
I said,
what message did you send last week?
I sent you a message.
I have a lot of message in front of me now on WhatsApp, or I want to trace your own. So what number did send me another one now. Let me see your number come up because I have a lot of message loaded. So send hello. Let me see your own number come up so that I can save it as a Oguchi, and then I can follow through with your request. Oh yeah, send me a message. Say hello or something on WhatsApp.
On WhatsApp, right? Okay, yes. I'll do that now.
Who is your manager?
The name again. The manager has led, but they gave me Ijeoma, one Ijeoma like that.
Okay,
it was Solomon Silvanus before.
Okay. Yeah. Oh, yeah. Send me your name. Just mention Oguchi in the name. Just say
Olusegun.
That's my name.
Okay.
That's my name. So just mention
From
Oguchi. Let's look at that, your question or your request, particularly.
Okay.
Yeah, I appreciate you, sir.
Thank you very much. I really appreciate
Thank
it.
God. Thank God. So
I've done
from
that.
everybody that have been part of this conversation today, I appreciate you all. Of course, I'll see you. I'll see you next week, Monday.
Will that be 2 p.m. this into the analysis, the technical analysis? You know,
You mean
there is a
online?
2 p.m. There used to
Yes,
be a
of
2
course.
p.m.
Of course, of course. Just be there. All right.
I want to be there. I want to be there.
It's all right.
I want to be there. Now, I don't have a job, so at least I have to see this opportunity since I'm at home
Yes,
looking for jobs. Let me know that I want to use this opportunity. I don't have a job. I
it's all
lost my
right.
job last week. So
Don't worry, you will get there. Thank you very much, Oguchi.
thank
Thank
you.
you very much,
Okay.
everybody.
Have a blessed day.
And you
I
too.
appreciate
Everybody, bye bye.